Onto the show, let me welcome Sandip Sabharwal, who is joining us, as well as Kunal and Naresh are also with us. A very good afternoon, gentlemen, and thank you so much for your time. Sandeep, let me come to you first because the SIP number, yes, indeed, the headline is that it's a record high number yet again, but no excitement from the market participants. How do you read it? As well as it seems like the excitement is just over with respect to this number every month that we get.
Yeah, because these numbers have become par for the course. So inflows are between 35 to 40,000 crores. So the good thing is that we are not seeing a tapering off despite people not making money over the last 6, 7 months. This is because last 5 to 7 years people have done well. So I think this trend will continue for some more time at least. And if at some stage we come to such a point where on a year-on-year basis people start making negative returns, that time we could see some pullback. But the equity cult overall is established. There could be some ups and downs, but I think these regular flows should continue. Now, this will not create excitement because foreign investors have been sellers and there have been a spate of you know, QIPs as well as IPOs of companies. So I think those are taking away the impact on the secondary market because on a net basis, flows into the secondary market are not very substantial because IPOs are taking away a lot of money and then uh, foreign investors have been sellers largely.
Okay, point taken. Yes, that flow money is definitely supporting sentiment, but what's supporting the market today is clearly the FMCG pack. Naresh, what would you make of the strength in some of these, individual names, and what would be the top recommendation within the FMCG pack?
5% from the top. And this looks like a bounce from oversold zones. We may, at one point of time, take a pause going forward. So the names which have corrected the most can bounce back and have some more to go. So Britannia looks interesting for a move towards 5,200 or a Colgate towards 3,000, 3,100. But given that half of the move we've seen today, the risk reward is not great. So would be something where you want to wait out for another further rise to reduce allocations rather than buy for a trade.
All right, that's the time where you reduce some of the allocations rather than a fresh buy. But Britannia does look interesting at this point in time. But Sandeep, what do you make out of the bounce that we are seeing on the FMCG names? Because clearly onto the Q3 updates that we are getting in, there's been no substantial recovery, or rather, now the other point that these brokerages are making is that given the kind of muted sort of a growth we have seen in the first 2 quarters, now the base building process is right there, and some of these brokerages are also bullish on a couple of these names. Budget is also one of the key triggers wherein consumption is expected to get a boost. We have to see how the numbers pan out, definitely. But what's your sense on the FMCG basket? Is this a sector where one should like start accumulating or rather stay away?
Yeah, so keeping aside the budget and keeping zero expectations of any consumer revival because of that, the consumer demand was supposed to revive last year after almost 1.5 years of subdued growth, 1.5, 2 years of subdued growth. It did not happen. Now, the last quarter also saw some companies do it slightly better, but overall, on the FMCG consumer side, the demand has been muted. Now, after 2 years of muted growth, given the fact that agri incomes could pick up, some urban revival could happen, and as inflation ebbs off, we could see potentially a revival in volumes. So there should definitely be some revival in 2025. Most of these stocks, after having run up to all-time highs 4, 5 months back, have fallen nearly 25 to 35% from the tops. Typically, high quality consumer names, when they correct 30% odd from the top, they become compelling buys because even if we assume that they go back to the same levels even after 2 years, that itself is a 20% kind of CAGR, which is very good for FMCG counter with large established brands.
Fair point. That's an interesting way to look at it. But Kunal, help me get a chart check on a couple of these names. IGL, which is up around 4%. And the other one is Manappuram Finance. Yes, we were discussing in the morning how it's in ban, etc. But take a look at the stock completely given up gains, that 5% gain that it opened with, and right now in the red territory?
Yeah, that generally happens. So I'll start off with Manappuram. That generally happens when the stock is an F&O band. So even if there is any kind of a positive news flow or a negative news flow, depending on the stock trajectory, just pre the ban, the stock tends to lose up or give up those gains. In this case, for Manappuram Finance, and then it tries to come back into a more of a flattish trajectory. Now, what's going to be important is to watch out if the stock comes out of ban today. If that happens, then I think we could probably be establishing a base for Manappuram Finance. So even after the intraday correction of 10, 12 points, 10, 15 points, I think 193, 195 was the intraday high for Manappuram Finance. The stock has come back to sub 180 levels. I believe if the stock comes out of the F&O ban, that could actually be sentimentally positive for the stock for the near term, and this dip could actually be bought into. Now, for IGL, we've seen that the stock over the last 1.5 odd month has gained quite substantially from a point when the stock was almost at 330, 340 levels. I think mid of November or the start of the month of December, towards a point when the stock had hit 440 plus mark just about very recently. I think it's trying to establish a very solid base on the longer term charts. I would still wait out for a confirmation breakout above the 440 mark, which could be just about some 3-4 percentage points away from current levels. That could be a very good point to initiate a buy on IGL.
Looking at the markets today, every recovery attempt seems to be a failed one, because for Nifty 50 we are still down about 170 odd points, and Nifty Bank some bit of a mild recovery coming in on that particular index, but definitely yes, it's India VIX that is not giving the charge to all the bulls. It's up around 2% in trade right now, but a lot of pockets indeed are doing well. And Sandeep, that's interesting to see that stocks like Escort is doing well today. Why I ask this? Because just today we were having a chat with an expert where he was sounding really bullish on the tractor space. Other than that, if we talk about the GDP estimates data, then there the agriculture space is expected to do well, and even the numbers are also suggesting so. So do you also like tractor as a play within the auto space at this point in time, or any other segment that you like, would you prefer, given the recent correction in some of these two-wheeler as well as some of these passenger vehicle companies?
So I think Mahindra and Mahindra also in the last conference call mentioned that there seems to be now strong traction on the tractor side after almost 2-year period of subdued growth. So I think tractors overall should do well, and once the cycle starts, it should do well for at least a couple of years. So M&M has been doing well on the SUV side, and if tractors also add to that, then that could be a further boost. So M&M has been our top holding in the auto side for a long time. Bajaj Auto is something which we have recently bought after a 30% correction from the top, because I believe that all negatives are in the price. Their exports are doing better than domestic sales, and with the recent fall in the rupee, it could aid their overall export business as well as margins on exports. And the agri income coming in strongly, combined with a good sort of wedding season, could boost two-wheeler sales also. So I think as a value pick, that looks interesting to me.
Bajaj Auto looking like a value pick because the entire domestic as well as export environment seems to be improving. But what is not improving is the market setup. We're just around the 23,500 mark. Yesterday somehow we managed to defend that, but today it's getting threatened a bit again. Naresh, what's the importance of 23,500 for the index, and what about Bank Nifty? Is it in a clear breakdown?
So we've been in a choppy market where we don't see follow-up selling. Say, given that 49,500, 800 is the low for the last 6 months, we've not seen a sharp crack in the last two sessions. It's a slow drift. Similarly, the bounce backs which we saw in the last 2 months, we did not see follow-up on any of the days. So I would expect a chopping out market. Maybe we bounce back again from 23,300 to 500 band, and say 49,000 to 49,300 band. So for now, not expecting a further downtake in a sharp way.
Right, for now, not expecting a further downtake on the Nifty Bank Index. Let's see and watch out for that. But even some of these stocks within the chemical basket, yes, we have been discussing about SRF as well as Navin Fluorine, and definitely the news flow regarding that. But today, even some of these beaten down names, Kunal, stocks like RT Industries is also up. 400 has been a level where Aarti Industries has been maintaining those levels, at least within that range nearby. At 4% gain, do you still like the stock, or do you believe that some of these traders rather who have been stuck at the lower level, is this a good opportunity to move out?
Well, it could be a mix of both, because what could happen is since the specialty chemical space as a overall basket, that's given a breakout led by SRF, Navin Fluorine, etc. I think what we may probably expect is that the leaders or the ones which have been more stronger, they would continue to outperform, and the relative returns over there could be relatively stronger as compared to the underperforming peers. But then there comes a point of time where even the most underperforming stock, in this case Aarti Industries, even that stock could probably get a leg up further. Now, when we look at this on the technical parameters, the stock which was almost at 390, 400 yesterday was at a divergence of almost 35 to 40% from its long-term moving average. 600 is the 200 DMA for the stock, and I think yesterday, day before, the stock was almost at 390 levels. So that's a steep divergence for the stock on longest term kind of a time frame. So there's bound to be a mean reversion phase which could happen for Aarti Industries, but as I said, that it depends on how the sector performs. The leaders, they generally continue to move up first, and then comes a wave where the markets get into a high confidence zone for a particular sector, and that's where the underperforming stocks, they also tend to pick up pace.
Okay, point taken. News at the bottom of the screen with respect to IGL, wherein the domestic gas allocation has been increased by 31%. The stock was in the green in any case. It's getting a further leg up on account of that news flow. We will discuss the chemical sector in detail with an analyst as well who will be joining us shortly. But for now, let me take it across to Sandip to get a better sense on some of these urban discretionary spend names. And I'm talking about the Kalyan Jewelers of the world, the Blue Star of the world. Of late, they have got a few downgrades. Kalyan Jewelers reported decent set of numbers, but not getting a thumbs up from the street. Is urban consumption slowing down even the upper end, Sandeep?
The consumption, so it's a very, it has been a case-shaped kind of economy where some segments are doing well, some are not doing well. So for many of these companies which are correcting in terms of stock price, it might not be anything to do with the fundamentals per se, but just the valuations. For example, Kalyan Jewelers, I think even after this correction trades at 90 odd times earnings. Now that's extremely high, and it's unsustainable valuation. So I think in many of the stocks which you are talking of, the fall can be attributed more to valuation as the sentiments in the overall market have got impacted rather than these companies actually not doing as well.
Okay, point taken. Individual names is what you need to see really, and not as a basket. Thanks, Sandeep, for making time and speaking with us today. But just putting the spotlight on TCS as well, as we're expecting the numbers, and ahead of that, there is a weakness definitely across the IT names. TCS too, at the lowest point of the day, not seeing any recovery. It's a seasonally weak quarter. We are working with just a 0.2% constant currency growth. Margins, yes, might expand, but not a major shift as far as the management commentary regarding spend is concerned, and perhaps that's the reason that stock is lower. We'll get the earnings over the course of next 2 hours thereabouts. But let's take the closing trade ideas with the technical experts. Naresh, what are you spotting on the charts as a closing trade idea?
So looking at Zydus Life, that's been trying to see some price volume action for the last 2 sessions. Could see some bounce back towards 1060 to 1100.
Okay, on Zydus Life, there is a bit of an upside on the charts. There was a brokerage note and an upgrade this morning from Nomura as well. So both fundamentally and technically looking better. Kunal, what about your pick?
I'll go with a buy on SBI Life. That's a stock which I believe is looking very strong in terms of the setup. The stock has confirmed breakouts on the short-term charts on quite a few indicator front. So expecting the stock to start to get back into a stabilization zone as well as a potential near-term uptrend.
All right, so those are the closing trade ideas from both of our experts, but definitely on the back of that news flow that Anisha was just mentioning, indeed we are seeing a good move on IGL. Even MGL is also getting to see some bit of an up move on the trade right now. But with this, it's once again time to slip into a very short break, viewers. Don't go anywhere. We'll be right back with more, and then it's the time to put the spotlight on the chemical space. So we'll discuss that in detail with our expert.